Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussions today. We've got ETH crashing down beneath 2K, again down 5%, as BTC is also down to 85K. We've got the draft stablecoin bill getting revealed. Got some key takeaways to share. What direction the stablecoin bills are moving. And finally, we've got the Say Foundation exploring a takeover of bankrupt 23andMe in the boldest DeSci bet yet. Very interesting direction the Say Foundation is taking. We'll tell you what you've got to know from that perspective. And as usual, we've got a general set of takes on the crypto and NFT market and general market rotations and where liquidity is flowing. I've got Legendary Bread and David, investment partner at Silvermine Capital, with us today. We are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is incredibly risky and we don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, it is Friday. It is the 28th of March. David, welcome back with us today. How are you doing? What are you up to? Where are you in the world?
Thanks, guys. Yeah, I'm actually in Cape Town at the moment for a friend's wedding, but there is a Solana conference on today, which I'll be going to after this. So
Nice.
Check out what the vibes are like over here and see. It's good. I think Solana are really expanding, right? They're putting on a lot of these events globally, trying to reach different communities, build out developers in different nations. So it's always interesting to come to these places, see what the sort of local communities are like and the excitement and these sort of things. So I'll be able to report back on that.
Which way round was it? Did you go to Cape Town for the Solana conference and then your friend's wedding was happening as well? Or was it, did you go to the wedding and you're profiting off the conference on top of it?
I'd love to say the former, but it was definitely the wedding, and then there happened to be a Solana conference. I wish I was that degen, but unfortunately not.
There's probably something to go to wherever you are in the world at this point. Quick question on that, David. I'm kind of curious, from a investment perspective, you guys obviously focus on pre-seed and seed stage products, but you do run some liquid stuff too. How much importance do you attach to finding these places in real life and just kind of catching the vibe and seeing whether one ecosystem may be more vibrant than another? Because I remember back in, I think it was one of the break points a long time ago, before Sol went on the huge run, everyone came back from that conference like hyper bullish, and suddenly there was this like explosion in the Solana ecosystem. Do you have a thought there from like a pure investment perspective when you're kind of evaluating stuff on the ground?
Yeah, and it's hard, right, to get a full picture of that from just going to little events and sampling. But a great signal is if there are loads of events going on that you can see these ecosystems are doing, and they're well attended, which you can, obviously photos are pretty deceiving, but videos or whatever, that sort of content, it definitely shows as a great metric. Like, as we all know, users of the chain, mind share of the chain, attention of the chain, let alone the actual developers on the chain, are the keys to like success within these ecosystems. So I would say having those events and seeing that, obviously a lot of it can just be like treasury funded and dressed up. So it's not the be all or end all, but not having anything like that is definitely a sign of like, okay, like, does anyone actually care about this? Because as we know, online metrics and chain metrics are so easy to spoof. It's harder to spoof in real life excitement and being there and speaking to people and developers.
Interesting. Yeah, I think that makes a lot of sense. I'm curious to get some of your general thoughts on the market in a little bit as well. But we're gonna kind of hit the headlines a bit sooner today, move through a bit faster. As I mentioned, or as I just tweeted, we're delighted to have Serpin, the founder of Ethos Network, with us, joining a little bit towards the end of the show. So we've got that interview coming up. Should be a great conversation of how, trying to measure and account for trust in the Web3 universe, where that is a pretty important commodity. So we're going to be getting into that conversation a little bit later. Let's get straight into the headlines, so we can get you up to speed with everything that's been happening in the past 24 hours, starting with the price action. We have, apologies guys, a bit of a red day today. We've got Bitcoin down a couple of percent at 84K. We've got ETH down almost 6%, losing 2K, is down at 1.9. XRP is down 6% to 220. BNB is down 1% to 620. And Solana is down 5% also to $130. I'm guessing the meme coin side of things is probably not much better given that. And you would be correct to think so. Doge is down 8% to 18 cents. Pepe is down 8. Trump is down 9. Bonk is down 8. SPX is down 10. Fartcoin is down 13. WIF is down 10. Pengu is down 5. Some of this stuff is still green though on the week. Remember, there was this big bounce in memes across the board. So it's not like it's given up all of those gains. Pengu, for example, is up 4% on the week, but down 5% today. Fartcoin is up 38% on the week, but down 13% today. So not quite given up all of the gains of the last week or so, but you know, another red day across the board, I think it's fair to say. Getting into the main headlines themselves, as we mentioned, Legendary will touch a little bit later. Just on the quick note on where we think we are in the market, ETH's down 5%, whereas Bitcoin is down to 85. The draft stablecoin bill has been revealed. We've got some key takeaways there. For example, no yield bearing stables will be allowed, and there will be a requirement to be backed by cash, treasury bills, or other liquid assets. Also draw a bit of a distinction between the Stable Act and the Genius Act, which are the two kind of stablecoin related bills that are being worked on. And then finally, we've got the Safe Foundation exploring a takeover of bankrupt 23andMe, the boldest DeSci bet yet. Brett's going to be breaking down what on earth that means for DeSci and how the blockchain is going to be integrated into this company. Getting into the NFT side of things, Legendary, is there anything we need to know from the past 24 hours?
I'm going to keep it short because not really. Honestly, most of the NFTs are following the market and correcting down as ETH has been going down. Pudgy's falling under 10 ETH, 9.85 ETH floor, down 5.5%. Little Pudgy's down even more, down 10%. Surprisingly, though, Bored Apes, they did go, we said that, above 14 ETH, and they're holding up pretty strongly. They're still at 14.3 ETH, basically almost unchanged from yesterday and still up 14% over the week. But apart from that, most of the collections have been following ETH on its way down.
Good stuff. Getting into the rest of the roundup, BlackRock's Global Allocation Fund disclosed a $47.4 million allocation to Bitcoin ETF shares. We had hyperliquid refunds, refunding jelly positions at a price advantageous to traders, except certain flagged addresses. We addressed that kind of big drama yesterday on the show quite sufficiently. We had Sony L2 Sonium announcing a partnership with Animoca Brands. Doodles announces DreamNet. This is something to do with their token, a protocol that empowers communities to create interconnected story universes with AI while capturing the value they create. A lot of buzzwords there to the AI, the creator economy. Very interesting. Trying to make their token have some value with a strong vision there for DreamNet. Taproot Wizards sold out at around 0.31 Bitcoin in auction. I believe those are going, the secondary market for those will be starting a little bit later today. They're not trading at the moment, so we'll see where they come out later. Premier ordinal in the Bitcoin ecosystem now. Bonk acquires the Exchange Art platform. That's a pretty interesting move in the Solana ecosystem. And then also, if you were trading, this is, you know, depending on your meme coin activity days, Jupiter will be airdropping to Ape Pro users. Ape Pro is like the equivalent of Photon, but the one that Jupiter owns. And so there's a little airdrop for people who are using Ape Pro as their kind of assisted trading platform on Solana. So check that out if you were active over there. That's the Web3 Roundup to get up to speed with everything else going on. Brett, maybe coming to you first. Anything catching your attention there? What are you interested in?
Nothing at all. I'm still absorbed in the giblification of the entire timeline and like all the knockoffs of that. Like I just saw Pix on chain, just did a bunch of ads for different blockchains and what that looked like. But then also, like I just dropped a link in our chat so you guys can see it. There's another one that was kind of interesting about, and this is just Twitter broadly, generally, and for like CMO people. And it was from Hasib at Dragonfly talking about like characters that you play on Twitter, or how you can successfully play a character on Twitter, and how you should perceive yourself in this environment, like if you are to someone to grow. So it's just saying basically that like, hey, you know, you come to Twitter, and if you're trying, like if you're a founder, if you're whatever, you should identify the role that Twitter is asking you to play, and then you should magnify and exaggerate that role. It's not about like being you, it's about being the character that you were selected for. I actually disagree with it pretty heavily. I commented on that. I like he's saying this, like he's like, like as himself as an example, he's like, you don't see me posting travel pictures, you don't see me posting like life updates. Like my role is not that. My role is, I'm assuming his perception is like to be this like wizard, grand, like Meister, guider of the universe's hand of conversation, right? But I commented on this. It's like, man, like I'm still huge on authenticity in this space, and I think that's actually what resonates a lot with people. Even like, I think I've done it myself, and I've seen other people attempt it, right? Like if you try to play a character that is not you, it fucking sucks. Like it sucks, and if it's grating, it's annoying, it's work, right? It's a task for you. And if you're not someone that likes playing roles, right, like it's just even heavier for you. So yeah, I disagree with it, but it was a good conversation. A lot of people actually, rah-rahed like, oh, be powerful, be bold, be whatever. It's like, motherfucker, if you're not that, don't be that. Like, be you. And I think that's what's going to resonate a lot, especially in an AI digital realm.
It's a very
that caught me.
Very, very specific reason why I agree with you so much, Brett, and very much disagree with Hasib. And it is to do with AI, because AI can, up to now, basically not be itself, not be authentic, because it doesn't really have, reached that AGI level to do that. But what it can do very well is play a character, and it can be the grand master, the wizard, whatever you want it to LARP as, but it can't be itself, and that's something that only humans can do. So if you want to play a character, you don't actually need to do it yourself. You can have an AI do that. You will have a hard time to distinguish yourself from basically an artificial intelligence leaning into its own role. So that is actually the major reason I would disagree with Hasib's take.
Yeah, I actually was very curious to hear your thoughts, Brett, because obviously you've built up your account in such a significant way, leaning into, as you said, like authenticity. And I think one of the challenges with that is, or sorry, not what it was, one of the challenges, what you said, one of the challenges of trying to accept the role that is being given to you is that kind of takes your agency away. Like, how are you supposed to know what role is being given to you? Surely it is a reflection of the things that you do and the things that you say, and then people kind of decide how they want to pigeonhole you, maybe. So I appreciate that at some point in time, after you have, put out a certain amount of content about yourself, you kind of found your voice, maybe, then people start to categorize you, and then maybe it's worth leaning into that specialism that you've kind of created for yourself rather than changing over and over again. That's where maybe I think what he might be suggesting, which is, well, how I would amend it is find your voice, or find the thing that you are passionate about and the things that you do want to express. And then after that, maybe don't flit around between, wildly between, I don't know, DeSci and then DeFi and then AI and then whatever and whatever and whatever. Try and find a niche and specialize, and then, but do find some, other things that you're interested about as well. So yeah, I take your points there. Anything else?
No, nothing for me. It's still just heads down to mega stuff.
David, curious to get your thoughts before we get into the headlines. Like, from an investment perspective, I think since we last spoke maybe 2 weeks ago, where were we at about 2 weeks ago? Probably not a dissimilar point to now, right? For all of the jumping around and emotional roller coasters that people are going on in the timeline, maybe your being on the show is actually a nice point to check in. Like, how different were things 2 weeks ago? If it's exactly the same, what torture are people doing to themselves in that period of time? Like, how are you viewing this? Still volatile period. Well, actually, it's not a volatile period in the sense that the price is probably no different to what it was 2 weeks ago, but this perception of volatility that could be coming in at any point in time. How are you guys looking at it?
Yeah, and nothing's changed from 2 weeks ago, a month ago. I think it's, again, like we've spoken about before, in terms of like the time frames people are working towards, and a lot of people on the timeline and potentially listeners of the show are so used to, or have been used to, playing in these meme coin cycles, which the time frames of a meme coin, if you're playing them the way you probably should be playing them, are very, very short, right? 2 weeks is an age in meme coin trading. When you're investing in pre-seed, seed stage projects, whether that's through Echo, syndicates, or at a venture fund, your timeframes are so much longer, and these days even longer than they used to be in this space. So like nothing changes from our perspective on the liquid side. I think it's honestly so important now for everyone to realize like where we are in terms of the market versus if you've been around since 2020, how different it is. A lot of people I speak to on the retail side, or whether it's in the Kingdom Ventures community or things like that, you sometimes see people holding on to their bags that they've had for 4 years, just with a assumption that at some point these are going back to either where they were or up 5x, 10x, and it's just a waiting game. That may not be correct anymore. Like that is something that I think could really change this cycle, and we're going to have these concentrated markets of meme coin mania, AI agent, maybe Dino coins, and then the new runners, the Mega ETHs of the world, the Monads, the movements, the Verachains. Your old coins may not get the love. Like in 2020, it was like buy any altcoin, we're making money. It's just how much. Not sure that's the case anymore. So I would say from that perspective, if that's the thinking, maybe it's time to like recheck in and check your portfolio and kind of think it's not just about being passive anymore. And I think like the safest is obviously having a couple of the majors, having with the majority, having a barbell with some memes if you want to play that on the short term, just to keep busy and feel like you're involved. But patience is the name of this game now, I think, and just being aware of what's going on and not over trading.
I feel like a part of me just died.
I'm sorry.
Like I had to just let go of something that like, I'm from class of 2017, right? So like I remember, I distinctly remember just like having that emotion or that feeling of like, don't worry, dude. It's like at some point, like the pool is gonna slosh back to your side of the pool, like your side of the tub, and your price is gonna come up, and then just get off then, right? Like that's gonna happen.
Pool's too big
And I
now,
think
right?
the pool might be too big right now, and like I don't know that I have any positions in like these. I'm totally out of like the major Dino coins and like some of these old super ones, but like yeah, like I don't think I've ever had to like confront that emotion that I used to have and say like, okay, like I have to like recalibrate my like some like a seed in my brain of like that's no longer, I have to put it to sleep. It's done. It's like now that's gone. But I've never had to like, actually let it go. So thank you, and I hate you.
And look, I'm not saying it won't happen, but everything's about probabilities, right? Especially in investing. So you just have to
I
probability
agree with
to yeah.
Brett needs help selling his bags anyway. So if we just tell him they won't, he won't do anything about it for 2 weeks anyway. So let's
sometimes
not worry
2
about
years. Like you know,
2 years.
that's
Maybe they will
the
be
part
back then.
I'm having to deal with. Is like that the 2-year portion of me is like fuck. Like some of those guys are not looking great.
I think that's probably fair. One other important question, David, that I had for you is like this liquid versus, you know, you operate on both sides at Silvermine, but are you noticing, because we actually noticed this on the deal flow side as well. This is the key question for me as an investor at the moment. Are you noticing any like urgency from teams that probably should have launched already and are like trying to get out, but the market is obviously not as good as what it was? I mean, to be honest, I don't know 100% how teams have been thinking about this. The market has allegedly not been good enough for 6 to 12 months to 18 months, even when it was good. So I'm not entirely certain that people are evaluating the market appropriately, but for whatever reason now, people think this is much worse than it was 2 months ago. And I think they are correct in thinking that. Are you noticing any urgency or any urgency in the deal flow where it's like, okay, well, on the liquid side, we need some help when these tokens launch versus, you know, new teams coming to market? And do you have any preference on that?
Yeah, so I guess there's a few things there. One, I agree with you in terms of like when the market was ripping, but again, it was ripping in certain areas, right? And if you look at like the general altcoin market, which a lot of these teams are launching into, it was always pretty bleak. So it was always every time in history, right? It's like Bitcoin runs, ETH runs, altcoins runs, and everyone kind of waiting for that waterfall to happen, which just didn't. So teams were obviously waiting for that slightly better market, and now it's a worse market. So you're seeing so many teams holding back, which are now you're in a situation. I think we talked about it last year, B-Check, like Q3 is going to be like a crazy amount of launches. We're now going into Q2 next week, and it's of the next year, and it's like most of those teams are still waiting. So that's a bit of an issue. But obviously, like the strongest teams, will still do well, especially from like pre-seed seed stage levels. And that's the name of the game, like we discussed 2 weeks ago. It's normal venture is you only expect a few to be those winners, and the rest either trend to zero or you break even. So that's the nature of venture investing. On the liquid side, we're starting to hear more and more about deals where teams are getting liquid funds in to buy X amount on launch over the course of a few weeks or months and getting kickbacks, right? Like how you know about those or how you see those, you can't really on chain. It's super hard. So, but there are teams doing that, and to be honest with you, like they kind of have to. We tell most teams like part of your strategy now has to have to get liquid funds to be investing on you post launch. So that there's a conflict there, right? Because everyone wants to launch at super high FDV, but a liquid fund doesn't want to invest at a high FDV. Hence the reason why they get these kickbacks. So there's so many like dynamics going on like behind the scenes. So I always try and tell like retail investors, it's like you need to know the game you're playing, especially buying things straight at launch, because there's things going on behind the scenes that you're not aware of. So it's not a perfectly open and free market as you would hope. And we don't do stuff like that on the liquid side. Our liquid side's much more like delta neutral strategies, like farming, yield stuff, liquidity provisioning versus like directional bets on altcoins, because it's so hard to know what's going on there.
That's super helpful, because I think that's something we've been talking about a little bit on the show, because that's what people have been talking about in general, that type of stuff exists. So it's very helpful for people to know that that's happening, along with that other conversation we had the other day on the show with the market maker conversation. The stuff that kind of came out with the market makers that were kicked off Binance, which were connected to movement, but realistically probably operating across the board in different projects in that way. So super helpful to have that color as part of that conversation. Sticking on the markets, then let's maybe have a bit of a general reflection here. Ledge, you've got this headline: ETH's down 5%, and I don't necessarily want to talk about ETH all the time because I guess we're kind of recovering ETH maxis maybe, but it is, it's down more than everything else. Do you want to place this in the context of where we are in the general market?
Yeah, absolutely. Market is so bearish that even the YouTube comments are talking about gym routines and supplements, and even Funky is part of that conversation. The last person who I would have expected to join the gym routine convos instead of the up and to the right market talk. But all the jokes aside, taking a quick look at the market, there's a couple of things that are applying quite some pressure on both Bitcoin and ETH. On the one hand, we had the conversation yesterday on the car tariffs, which are to be introduced on April 2nd, but that's not the only thing that is coming in terms of tariffs. There's going to be some more global reciprocal tariffs coming on April 2nd as well. And that has impacted the stock market quite strongly, both the S&P 500. The S&P 500 is down yesterday, as well as it's down on the pre-market. But even more importantly, if you take a look at Asia, Asian stocks are down across the board. All the indices are moving down anywhere between 0.6 and even 2%, almost 2% for the Nikkei. And then on top of that, we are waiting today for the US core PC inflation figures. That is the personal consumption expenditures. And it currently looks like that month over month, it is expected to rise by 0.3% and be at 2.7% year over year in February. And as a result of these higher core inflation than expected, the market is once again more bearish on the Fed lowering rates and still holding rates at the same level at the next FOMC meeting in May. And all of that together is not only applying pressure downwards on the stock markets, but clearly also impacting the crypto majors as well.
Very nice. Very nice very nice summary there, Legendary. Appreciate that. Coming straight to you, David, what's your outlook on the markets at the moment? I think you're pretty well positioned to have a thought here. Q2 outlook, Q3, Q4. What are your thoughts?
Yeah, like short term, and when I say short term, I'm talking like Q3, Q4 versus like the next couple of weeks.
Very important distinction.
Yeah. It's unknown, right? Like there's so much uncertainty with what Trump's going to do, tariffs here, tariffs there, the general policy and stuff like that, and macro rules the world, and especially like crypto. So it's hard to really know because Trump probably doesn't even know, and unfortunately, he's kind of the dictator of the markets at the moment. But I do believe like the long-term plan and their plan is to obviously just get this debt refinance, get rates low, and then start quantitative easing. Whether that happens in Q4, Q1 next year, I don't know, but I would bet with a 90% plus probability that happens somewhere in 2026. So in that medium-term time frame, and when I'm thinking cycles, if that even exists anymore, or the next 3 years, I think we go to a very good place in the overall markets and the crypto markets. I just think the old school cycle of, okay, this is the halvening, this is what we're following, this is 2025, etc., may be broken or maybe delayed or whatever that may be because of this like uncertainty that we're going to have this year. But 2026 looks pretty exciting, I think.
Okay. Interesting. So I guess, what do you think the damage is in 2025 then? So I think it's becoming more and more consensus to just want to push out when things are going to be good because they can't see it around the corner. What's the damage in 25? Like, is it we stay where we are, we chop, or do we, do you think there's further hits, or you think it's just related to the tariffs and the administration, and basically whatever the administration does will directly impact?
Yeah, it's super hard to say. There's a lot of variables, right? We're seeing institutional adoption across the board of our industry, but a lot of that adoption is coming through things like stable coins, which doesn't necessarily impact your altcoin bags, right? So it's hard. The industry is getting adopted. Bitcoin's being more widely accepted as a store of value or whatever you want to classify it as. So all those metrics are good, right? But most of the headlines you're seeing are always pretty good from the general crypto thesis. But then that's paired with very negative macro, and that macro could get pretty choppy and pretty down. How far it can go down, it depends how aggressive the US become. But you have to remember, look, zoom out of the stock market as well, right? That thing only goes one way, and like any dips are worth buying. So it's going to rebound. How aggressive that is and how quick that is, and when that happens, with the plethora of stuff we're seeing coming out and the positivity for crypto, that creates an unbelievable catalyst at some point whenever that happens. Now, I'm not a trader, so I don't really care. I just buy, and this is personally, not even professionally. Just keep buying the majors. When you get the signal that an alt season comes, start rotating in. That's kind of how I view it.
Appreciate it, man. Interesting insights. As you say, I think it's challenging to call precisely, but damn, YouTube comments getting bearish today. Feeling pretty bearish in the comments. Wonder if it's a counter signal in the comments. Right, but you did mention stablecoins a lot. That leads us quite nicely into the second headline for today on the draft stablecoin bill. This is the news that the draft of the stablecoin act was released yesterday. This is pretty important because obviously this is one of the main things which people are holding up as how our industry is kind of adopting crypto, and it's being pushed as one of the most important things that the states want to get sorted so that crypto can be more regulated and do business, be ready for business. Key takeaways were the following, and remember, this is just a draft, so this is not, set in stone just yet. We have no yield-bearing stables. We've got bank, credit unions, and non-banks being able to issue stablecoins. They must be fully backed by cash or treasury bills or other liquid assets. States can certify their own, but they must exceed the federal standard. We've actually heard, I think it was Wyoming, who are going to be issuing their own one. And there'll be no algorithmic stables for 2 years. So probably pretty sensible legislation there. Just in terms of the two acts that are taking place at the same time, you've got the Stable Act, which is this one, which is focusing on enhancing transparency and accountability for dollar-backed stablecoins, and that's kind of targeting payment stablecoins like USDT or USDC. In contrast, the Genius Act, which cleared the Senate Banking Committee earlier in March with bipartisan support, took a slightly different approach. It establishes a dual regulatory framework. Stablecoin issuers with over $10 billion in market cap fall under federal oversight, while smaller issuers can operate under state supervision, mirroring federal standards. So that's when you kind of hear these two things being spoken about. That's the kind of small distinction there. I'd say the key reaction, well, there has been some key reaction. I think the founder of DeFi Llama was asking the question out loud, excluding lobbying by Tether and Circle to maintain their position and avoid a race to zero, what are some valid reasons to forbid passing yields to users? This is why stablecoins are the best business in the world, right? They can hold your money and they're not going to give you anything for it. If you want yield, you've got to go and put it in Aave. You've got to go and do things with it in crypto. But traditionally, even though banks don't give you very much for holding your money, they still give you something. And so stablecoin issuers get to keep all of that yield to themselves as things stand. So the question was, what's stopping it? Kobe actually replied to this and said banks would literally just go to zero, with the idea being that money would just flow into crypto because you're still going to start getting like real proper yield. Whereas, I mean, I think the bank yield at the moment is, especially if it's just in a normal account, sitting there getting almost nothing. I think my take on this is that the point is, this whole system, whether people like it or not, is not designed to usurp the current system. The point is to extend the hegemony of the dollar. So stablecoins are not going to be used to make sure there's lots of, they are going to be used to make sure there's lots of demand for treasuries, and they will not be interfering with banks' power. So no, they're not going to do things which put that status quo in jeopardy. I think that's the reality that people are going to have to contend with. Yes, on some level, the spirit of crypto is to like become more bankless and want to do all this stuff by yourself, but it's not going to come at the cost of the banks, I don't think. Curious for your perspectives here, Legendary. What are you thinking? Then maybe come back to you, David. Then Brad will come to you for the say stuff.
Yeah, I think it's a pretty sensible act, and I very much agree with that line of thought. The point is not to have max yield going on and attacking the banks like that. Plus, I think then it also would make it a bit harder to not view it as a security of sorts. The thing that I've also been wondering is, by that definition, what this implies for Ethena, which isn't really a stable coin, it's a synthetic dollar. And again, you said algo stable coins, not before the next 2 years are over. The price of Ethena is down 12% over the last 24 hours, but I don't think that this allows for any meaningful conclusion, given that ETH is down more than 6% now, and all the other alts have moved down as well. So I think we will have to watch that a bit more closely over the next week or so to see if the market thinks this should have a negative impact on Ethena or if that doesn't matter.
Good question. That's a good point. I hadn't thought of that. David, what are your thoughts? And then Funky has his hand raised. We'll go straight to him.
Yeah, I think obviously this is good overall. I think the yield bearing point is interesting. Like, obviously everyone's seen how profitable Tether has become as a business, right? And all they do is hold treasuries and issue a dollar on chain represented against that. The question is always, why does the user of that not get that yield versus the company? And obviously Tether don't want to give that up, but you would always think over time with competition that would change, and then you as the holder. And that's different from the Ethena model in terms of doing the long short stuff. It's just literally passing back the treasury yield, which this bill states can be the backing. So then it's a case of, as an end user or as a person, most people hold cash versus treasuries because it's more complicated, it's less liquid, you can't use them day to day. If surely the best solution is having this fully liquid on-chain treasury, short-term treasury bond that can be traded one for one and you're earning the yield for. So how this develops over time, I'm not sure, but I would imagine, for me, the best end product is almost a liquid one-to-one stable treasury bill that you are earning a yield on and can be almost substituted for cash.
Interestingly, I think Ethena have the USDE, but they've also got USDTB, which I think is done via Securitize, and that's supposed to be treasury bill. So I need to check how, like, whether that's the yield, whether you actually get that yield in a liquid way, or whether, I don't know, you redeem it some other time. But I think that product basically exists. So that's something to double click on, I think. Funky, welcome to the stage, my friend. What's your take here on the Stablecoin Act and what is going on as we kind of move towards adoption there?
GM, hopefully you guys can hear me okay.
Beautifully.
I'm coming perfect. I'm coming fresh with the alpha from this week's Blockchain Association monthly member meeting.
Leak the signal chats. Leak the signal chats. Everyone else's.
We probably had like a good 20 minutes on this. So a couple of things that people should be aware of. first and foremost, the White House is effectively calling the BA offices nearly every single day. They're getting messages and phone calls about this legislation that's moving through. So the members of the BA are going to have significant impact on what this is actually going to, the full outcome of this particular bill. Now, in the case of the Stable Act, yes, I think it's the one that prohibits algo stablecoins. But if I'm not mistaken, the Genius Act does not have a take on that at all, and that's the Senate companion bill. The next, I think April 2nd, they are going to have a Financial Services Committee markup, and they are already fielding comments from Blockchain Association members. So there are dedicated member working groups who is one specifically on stablecoins with some very, very big names who take part in these member working groups. They will have the first take at the bill language and be able to offer comments and suggestions for those markups. The one concern that a lot of people are expressing right now, especially on the Senate side with the Genius Act, is because, of course, everybody's favorite Senator Elizabeth Warren is one of the minority ranking members on that committee in the Senate version, and they're worried about sort of AML overreach when it comes to stable coins. So there's a lot of moving pieces right now that are happening behind the scenes. However, because to your point about this really is all about continuing the hegemony of the US dollar and proliferating it throughout the world on different rails, they are very motivated to get this done before they go to the first recession in August. So they think it's very, very doable that we're going to see these bills, both the Genius and Stable Act, move quickly through both chambers, then get to the point where they will have some sort of reconciliation. And before they take their leave for the summer in August, that we will have stablecoin legislation in the United States. So that's kind of the current alpha and everything that's been happening behind the scenes, and just adding a little bit more context to the conversation.
Love it, man. Appreciate the additional context. I think, as you maybe alluded to, it does sound like the administration is trying to move. The word I keep remembering is just at tech speed. That's what Sachs has been saying a lot in a variety of contexts. Brett, did you want to come in there?
Yeah, I just want to say, because like a lot of this is talking about like the actual model of these stablecoin stuff. I want to call out the thing that I'm hearing is the incentives fucking suck, and I'm afraid that we're going to have a gajillion stablecoins from a gajillion issuers and recreate the same fractured state we're in today with all of these blockchains, right? The incentives are for, oh, well, if we can create our own coin, as long as we do our own thing, we'll capture our own value and make our own whatever. And then you end up with a world of 200 stable coins where you walk up to a coffee shop and go, oh, do you accept JP Morgan stable coin? No, sorry, we only accept Arkansas stable coin USDC. Oh, okay. Well, what about Bank of America USDC? Yeah, sure. Okay. Well, let me transfer that for you. Like, fuck that.
Yeah,
that's going to suck.
And imagine, so look, when you're in Wisconsin, who have issued their own stablecoin, they're not going to want you to use other stablecoins, right? You're going to have to go to Wisconsin and use their stablecoin.
Stop at the border, scan the QR code, instantly swap in from Wyoming USDC into Arkansas USDT. Zero.
Instead of having $1, you've got one for every single state. Interesting. Very, very interesting.
And then you have the Solana minded stablecoin come to the world. It's probably gonna be Tether. Tether's just gonna be like, nah, dude, we got you. We're illegal. Just do what we just come to us. We're one big stablecoin, and then they're gonna make even more money.
Interesting. Yeah, maybe this stuff's just gonna have to get abstracted away in the background, I suspect. Interesting stuff. Right, that's that. We've got one final headline before we get into our interview with Serpin from Ethos. Looking forward to that conversation in just a moment. Brad, give us the quick hit on what on earth's going on at Say. Pretty interesting headline here on the DeSci universe.
Yeah, it's more, I would say it's more flashy than anything, but I'll give you guys a TLDR. So there's two parties involved here. One is 23andMe. If you're American, I don't know if it was international, but if you're American, you might remember this. It was a company that went public back in 2021. They announced Sunday, on March 23rd, that they're actually filing for Chapter 11 bankruptcy. Again, 23andMe is like a DNA company, right? You would send in some samples and they would go, oh, bro, you're from the southern part of the sub-Saharan, whatever. Oh, you got a little bit of like fucking dachshund in you, whatever. Like it would break down your DNA, right? So they got a lot of human data from I think it's mostly Americans. And then there's Say blockchain is a layer 1 blockchain in the Cosmos ecosystem, EVM, all that shit, super fast. That's its TLDR. Well, anyways, Say our 23andMe filed for bankruptcy on the 23rd. And Say put in a bid for them and said, hey, like they announced that they're putting in a bid for them to acquire them. Now, some of the numbers for this are pretty interesting. 23andMe has to collect at least 214 million before it would to pay back to its creditors, right? That's how much money it actually owes to a lot of people. And then before it'd be able to pay out to shareholders. And then there's the Say Foundation launched by Serpin Capital. They have a $65 million venture fund to back up specifically D-size startups on the Say blockchain. So they've actually pivoted to this or tried to empower this specific sector as like a pinnacle of their ecosystem. On the news that they put in the bid for that, it's the stock for 23andMe actually went up 45%, and the token went up 1% to just over 2 billion. Now I'm actually in this. I've done 23andMe, so my DNA is in jeopardy here. If Say was able to acquire 23andMe, what they said they would do is they would try to put the DNA on chain potentially, and then have some privacy preserving ways where if it was utilized, say for training or for some other needs, it would be privacy preserving. I would get, or someone, if you had your DNA that was accessed, would get a portion of the proceeds, kind of like this whole IP story that we're hearing with like the Story Protocol. So yeah, that's a TLDR. I think a lot of people saw it as just like a marketing thing. I know one person in particular, Tang Yan, who's like really big and like he stepped in the AI stuff, just said like it's all marketing, right? This is like the biggest cope thing that they've ever seen. But that's a TLDR. I hope again, my DNA's in this shit. I didn't really think about it. I was just like, whoever buys this fucking company gets my blood. So that's cool.
It's valuable.
We'll see. We'll see how that goes.
Interesting. Okay, so I guess the kind of full details of how they execute all this is kind of up for grabs, and we'd need to consider that a bit more. But as you say, pretty bold going on chain with this data. Pretty exciting. David, just a final thought as you kind of roll out before we hit in the interview. You were chuckling there. What are your thoughts?
Yeah, I have multiple thoughts on like these sort of strategies, DeSci as a whole. It's good to kind of see these worlds merging in a way. Whether it's a good acquisition for the Say Foundation, yet to be seen. But I like their thinking, right? Like they're trying to preserve the data, they're trying to put it on chain. It's a nice thought. But yeah, I like DeSci as a whole. I think is a very tricky space. Like the rewards are huge, but they're very low probability. Which doesn't really suit a lot of crypto people.
Big swings, right? Big swings in a very hard to hit the home run, I think there, but I guess they're trying. All right, interesting stuff. Guys, as we said, David, thanks so much for joining us today. You're going to be cycling out. You'll be back with us in a couple of weeks. Serpin, let's welcome Serpin to the stage. Founder of Ethos Network. Very excited to have this conversation on the reputation layer of Web3. Serpin, welcome to the stage with us. How are you doing, my man?
Thanks. Doing great. It's a little early, but we're hanging in there. So I'm kind of worried about my my DNA now. Listening to Brett guy talk about 23, I didn't know any of these things were happening, and I also sent my DNA to 23andMe. So we're in it together now. Literally.
I remember the app being great. Like like it was cool. Like I was like, okay, cool. I'm like kind of French, kind of Irish, I think. Done. Now everyone can just like do whatever they want with my shit.
Yeah, that was like years ago too that I did it, probably almost a decade.
To your point, like with my legal hat on, I would have thought there must be something in that, like when you wrote your disclosures, when you wrote your thing, obviously that data is as sensitive now as it would have been back then. Like the concept of this data being sensitive is not something new. There must have been things in that initial agreement which said like people can't necessarily just go and put it on the blockchain if that wasn't agreed to you at that time. And if they were going to do that, I would have thought they would need to let you know that that is their intention before they go and do something that was not in the original agreement. So I don't know, that's me being a lawyer, but who knows?
Yeah, maybe it's not even just the breakdown of like, oh cool, this dude's kind of French. That's not even like, it knows my entire family, right? Like if someone were to be malicious, right, towards me, acquire the data, they could then say like, oh well, bread guy let's say they know my real name, like, oh, I want to get to him. I want to, like, see all the stuff that happens in Europe. They're like, okay, well, now I know his mom, I know his sister, I know his biological dad, I know his cousin, I know, I can see that they chatted, because you can actually like link up on the actual sites. Like, all that shit is pretty sensitive.
It doesn't sound like it's for the blockchain necessarily.
Let's make it public.
Right. Let's make it public. Okay. Yeah. Interesting. I'm just letting you know, you've got a legal pushback if you need me to push back for you. Right. Let's get into it though. Serpin, welcome to the show. I'm just going to introduce you properly so that everyone knows. I'm sure people do. But Serpin is the founder behind Ethos Network, a decentralized trust and reputation protocol designed to bring credibility to the on-chain economy. Ethos raised a $1.7 million pre-seed round. I think it was in July 2024 from angel investors, making a point to only raise from the community without a lead. He also runs a liquid hedge fund called OX5F Capital. Curious to hear his thoughts, maybe a bit more generally on the market as well then later. And in this conversation, we'll dive into the vision for Ethos, the challenges of building a protocol for trust in Web3, and Serpin's plan to optimize the protocol moving forward, and how to make it a profitable business. Serpin, welcome. Tell us a little bit about you, maybe your history for people who don't know you before Ethos. I know there's a lot of friend tech history with you and Brad. I think that's how you guys connected maybe initially. What got you interested in this like reputation layer here?
Yeah, I mean, it's kind of awesome that Brad's here, because that was a lot of the inspiration originally. Like, I don't know what the chances are of Brad actually being on this space at the same time, but it ended up working out perfectly because, yeah, if you go back to look at what we were doing on Friend Tech, I feel like Friend Tech was a really interesting early insight into this idea that we could potentially measure reputation and instrument it on chain. And what I mean by that is in the Friend Tech days, and Brad was a big part of this, like there were dashboards where you could say, okay, this person did or didn't sell like their keys. They sold out of the like 3-3. They defected from their 3-3. And you needed those dashboards because you were trying to farm Friend Tech, and you needed to know who to trust and who you couldn't trust. And because in Friend Tech, you actually tied your identity on Twitter to this wallet, you could actually for the first time see like, hey, this is what someone said on Twitter, and then this is what someone did on Friend Tech. And that wasn't what Friend Tech was trying to solve for. It wasn't like they were like, oh, we're going to like, solve the world of credibility. They were just, it was just an app. But we made like this own game almost on top of Friend Tech in a way. And it gave me the first insight of like, wait a second, what if we could help, like use a lot of the stuff from Friend Tech and help prove who is credible by having stuff tied to your identity in Twitter and then put on chain. And how could we extend it? What would you improve about it? How would you like, make it even better than that? And so that was a lot of the original inspo. And yeah, I mean, like there's a pretty funny story behind it of like, there was a guy that Brad and I went on a space with that convinced us he like 100% understood and believed in Friend Tech, and that it was actually like the proof of credibility, the thing that like I'm trying to build now. And he like got everyone to like pump up his key. We all bought it afterward, and we're like, yeah, this guy totally gets it. Like, I'm gonna go buy his key and stuff. And then like a couple of days later, he just like dumped his key on our face, and we like, what the hell, man? And this was someone who had credibility before supposedly, and he just ruined it. And you're like, wait a second, I can point to where he ruined it on chain. Like, that's actually really cool. That's a really big insight. And like, it sucks for him, but like, that was one of the things that like led us to building Ethos, was this idea that like, hey, this point in time where he screwed a bunch of people over and his identity are now tied together on chain. And so that we basically took that and ran with it.
That's super interesting. So what was the first way that you thought then to try to capture that moment? Because it sounds like there's a moment where people's it's like that thing that people say about people's reputation, right? It can take you a long time to build up, but you can lose it in an instant. So what was your first thought of like how to try to capture that? Because what you've built is ultimately very different to Friend Tech in like a number of ways, even though that was inspired from that. So what was your first thinking of like how to unpick those problems to build something that captured that?
Yeah, I mean, so one of the things that this is why it's so funny that Brett and I are up together. It's like Brett had this dashboard called like Brett built a product even on top of the data.
He's got
And
dashboards on all of us. He's got like
yeah.
all kinds of data sitting around there.
But the dashboard was really helpful, right? It was a way, like when you're trying to understand who you could trust and who you couldn't trust. Yeah, like there was actually the first like iteration of a credibility score is this dashboard here. There, if you go up a little bit, there is like the line items, and in the line items, one of the columns is like score. I think it's all the way to the right, and quality. Yeah, and so that was the inspiration of like, oh, what if you could have a credibility score, and it's based on all of these inputs.
Yeah, so just for the people who, so if you're watching in, you'll be able to see this dashboard on the screen. If you're just listening in, Serp, could you just take us through, like, fine, we have a score here. How was the score comprised? What were maybe the key line items that added up to your score that people thought, well, this is what creates a trustworthy person?
Yeah, and just to be clear, this is Brett's score. That's what the cool thing is like,
well, yeah, like back then though, how was it being calculated?
Yeah. It had to do with basically everyone started creating this game of 3-3 on top of friend tech, where you buy my key, I buy your key. And 3-3 is like the prisoner's dilemma. It's the ultimate, like, if you trust me and I trust you, then like we get something out of this. But if I screw you over, then I win more. But if we both screw each other over, then we really get screwed. And so there's like defection rate, which is like people who exited a 3-3. There's 3-3 bonds, which is like people who actually like, bought each other's keys effectively. And then you had all of these different inputs of like, okay, it really like defections was the main thing, I would say, like people who exited the 3-3 relationship. And yeah, like, and the data is like totally screwed now because everyone exited 3-3 relationships. But like, yeah, that was what originally went into it. And again, like, yeah, you're right. Like Ethos now is totally different. Like there are things that we took from that. Actually, like the original part of Ethos, like I retweeted this the other day. It was like October of 23. And I was like, we need Trustpilot on top of friend tech data. And which sounded weird at the time, like, or now, because like we definitely did not build on top of friend tech, but like at the time it made sense because we needed a way to trust each other. We didn't know how we could trust other people. And it was like, we need a way to record this. It seems so easy to just like put a cliff note on chain and say, this guy's not trustworthy. And so that was really the inspiration. I was like, okay, what if we took the best things from friend tech, where like 3-3, was arguably good, arguably bad on friend tech. Like, it ended up being net bad, but it still taught us something. Buying a key and seeing who had the highest key price taught us something. And then, but I felt like it still needed that, like the quality element, the qualitative, like I need to review someone. I need to put some words against someone's name.
Got it. I think that makes sense. Go on, Brad. I've got one, but go for it first.
Yeah, I think I was just gonna say, like I think what he's highlighting with a lot of this stuff, we're like, yeah, we were trying to approximate a lot of this shit, but there's so much nuance to all of it, right? Because like he's right. We would look at that and it's like, okay, cool. We have like bonds and like, well, I sold my keys. Like, oh fuck, I can't. Like, that's not like you're my homies. Like, dude, I needed to sell it because like the market, not because I hate you, right? Like, I just needed to make an adjustment. Or like, okay, well, what if I sell a bunch of shit rapidly? Like, okay, there's a little bit of velocity there. And it shows that like, oh, I'm dumping it, right? So like if I'm dumping all my entire portfolio, that's probably indicative of like someone that's trying to like get the fuck out before like anyone else can notice and dump my key kind of thing, right? It's like there's a lot of like user nuances that you couldn't actually easily quantify with that. And we were using this stuff to inform our buys. And it was like, oh, this person seems trustworthy. They're a smaller account, but they're 100% locked in. They're holding their keys, like they're trustworthy in that sense. So it's like, okay, I want to highlight people who are showing this and then like, or maybe you're not a traditionally known name or something. So we were using it to inform our own decisions for some of the profit making, right, with key buying and whatever. And then like now in Ethos, Serpin's implemented a lot of those learnings with like, oh, I can unstake or I can like break a bond, but like I can do it like without it having a negative effect on someone, right? Like I can actually indicate that on the platform. So it's trying to patch a lot of the holes that we had. That was, again, Friendtech was an imperfect product. We were hoping it would eventually move towards this, as like we kept talking about it to try to like, hey, Racer, you have potential here. Hey, Racer, there's something here that you can actually like leverage. And then he just like went and did his own thing and schizo posted, but there was potential there.
For sure. So we're going to maybe dive into more on the product side in a moment. But the thing that I'm taking away from both of the things that you said for now is this connection between money and trust. And I wanted to ask maybe a more personal question for you, how you think about the connection between money and trust, even for example, in some of the assets that we display, right? So for example, you have a hoodie punk, which is, a grail asset. Lots of people in our industry will go around actually aspiring to have some of those assets. And actually, I read a tweet this morning from someone who recently bought a CryptoPunk, just like detailing the way that people perceive him differently now since he's made that change. So I think this relationship between trust and money is super, super strong here. How do you think about that? And what are some of the challenges with that? Or do you just lean into that because, look, for whatever reason, that seems to be such a strong reality?
I mean, it's a tough one because it's human nature. When you scroll on Instagram and you see the guy that's talking about his Ferraris and his Lambos and stuff, like the content usually pulls you in. Why? Because it's like, oh, this guy was successful. I could be successful too. Like it's a natural thing that happens. Like it's an inherent, not quite inherent, but like it's a thing that creates credibility off the basis of like most people don't have Ferraris, right? And so you take something like a punk, and if you think about in the last NFT cycle, one of the things that was really common is people would really judge credibility based on what profile picture they were using. There would be people that'd be like, oh, punks are posting about this, or like the Spirit Azuki is talking about this today. And that was a way to build credibility. And it was actually one of our only ways to build credibility as someone that's totally anonymous, was like, hey, I'm like pocket watching, even though you're displaying it to everyone, but like I can see more about who you are. And if you have a $50,000 NFT, it speaks more than the random bot who is, rocking a $4 NFT. Like, it doesn't mean that someone's perfectly credible, but like our human nature says that person is more successful or has had enough success where like I am going to listen to what they say because of it. And like credibility is the foundation of how we interact with each other anyways. And so like that was the starting point. And yeah, I mean, it's a really good point of like, when you think about having a hoodie punk or a punk in general, like what doors does it open? And sometimes they're obvious and other times they're not obvious. And it's just that like people look at they look at your tweets differently, or they think about what you say differently. And like, it helps with credibility. People were tying like, oh, like, the past few products have all been punks between Jeff on Hyperliquid and the guy from Kaido, like they're a bunch of punks that are doing it now. And then they start associating those things. And it's human nature. And so when it comes to Ethos, go ahead.
No, go for it. Give it.
I was going to say, when it comes to Ethos, like that was something I remember originally thinking, like, if you like spoof your NFT, should that count against your credibility? Like, probably, right? You're like, it's the Instagram guys that are like renting a Ferrari for a day and then recording 40 videos and being like, hey, do you want to be successful like me? And people did that. People did that all the time. And so like when I think about Ethos and how it relates is like, like reputation scales infinitely. It sounds weird, but like people that are in the top 0.01% of the world of reputation, like put a president up there, or like Barack Obama or President Trump. God, I'm getting myself into a bad spot. Let me go back towards like Vitalik or something, right? Vitalik has an incredible amount of reputation compared to even anyone else in the space. And measuring that is really difficult. But like when you think of Vitalik's name, you kind of can put him in there in that category. Well, the way we've tried to do it is say like, hey, you become exemplary. You get to a stage in Ethos where you have that green border and that becomes that simple mental check. It doesn't scale infinitely, but it does help in terms of like kind of getting an idea of like who's the most reputable and who's not. And the last point I would make on that is, you had originally asked like, okay, well, how does money really come into the trust equation? And it's like, it does. Like, trust is driven by money in a lot of cases. And, you know, we have this vouching system where you can stake your ETH against someone, and it becomes this way to say like, oh, I'm measurably, you know, people have taken money out of their bank account, put it against my name, and that means something. And if it's $20 versus $250,000, it doesn't actually change that much in Ethos, but it's shown there, and it could mean something else to someone. And so anyways, that's how I think about it. Like, they are tightly intertwined, and I think you have to lean into that. The last caveat, I know I've been talking for a while, the last caveat is like, you still need people to be able to earn reputation without having access to that money. And I feel like that's something we've done well so far through just reviews that are free.
Go on, Brad.
Yeah, I just view it as like different levels, right? Like, and I think that's kind of how you've articulated it in the actual product itself, right? Like, it's like, oh, I can do some social signaling, and like, you know, I actually had some like very direct conversations around this during early product, right? It's like, okay, controversial figure, Kook, right? Kook is someone that is like very controversial on the timeline. I'm like, man, would I stake money in Kook? Probably not, because he's so volatile. Like that's a big commitment from my side. Would I vouch for him, which I have on Ethos? I would, because I know him personally. Like, I know the character that he plays on the timeline. Like, I know, so like there's degrees of commitment that I'm willing to make to a certain profile based on stuff. And if there's someone like a legendary B-check, you, Serpin, like, I would throw money into your stuff because you're both like stable and like universally like appreciated, liked, trusted, whatever. So like, that's a safe, stable investment for me, or just like, not, I wouldn't say investment, but a place to hold my money versus other personalities. So like, it's just like a spectrum that you've enabled with staking or vouching.
Absolutely. Brad, do you want to just take it there into some of the more product specific questions, if we're going into vouching and some of the other mechanisms that that Ethos have started to implement?
Yeah, I guess for people who don't actually understand like Ethos, the product, or like what it is, right? So it's just you've described it a little bit here, right? It's the ability for us to have a platform on chain and off chain. Actually, most of it's on chain, to socially signal and sometimes monetarily signal for certain other players that we appreciate them or don't appreciate them, don't trust them, don't trust them or don't trust them. Now, the actual product itself is made up of two components, right? There's the one that's just like the pure reputation layer, which would be like Ethos network, right? So I go on there, I can write a review for you, I can vouch money in you, your profile specifically. I know right now it's based on just X profiles. So like, I come in, I sign up, it's my X profile, it'd be Bread Guy tied into my account. I have an on-chain address on the back end, or I can sign in and tie an address to it, right? And I go from there. People can do thumbs up, thumbs down, all that stuff. And I can review not only people, but like brands, companies, whatever, and then you can slash people, right? So you can have the attempt to go after someone and say, hey, this person's reputational score is actually out of line with what I believe their reputation should be relative to everyone else. And I can risk my own to deduct other people's. And then there's a second component, which is called Ethos Markets, right? And that's actually something that you guys just opened up recently, so that it's permissionlessly market creating, I guess is the weird way you would say that. And it's like, I can almost have a poly market for the trust score of my of myself, my profile, right? So like, I can go and say market starts at 50% trust or 50% distrust, and you can go and actually like buy shares or shares of either side of that to drive the price in that direction, right? So if I buy a bunch of I trust this person, my trust percentage would go up, and then it would go from 50 cents on the dollar to 60 cents on the dollar for what I put into that thing. And like, you have the opportunity to make money. So like, there's the lizard brain, monkey brain, whatever you want to call it. Like, I can make some money on this because I think the market is mispricing someone's trust score in a market. And then there's just like the actual social like clout brain side of the world, which is like, okay, I have the vanity stuff, I have the actual reviews, reputations, whatever. Which is a good way to articulate your product. Is there anything I'm missing there? Which of those two? I know you and I thought the lizard brain thing was what was going to like send you guys, right? I was a little skeptical that people just wanted to do the vanity stuff for the sake of vanity, but people have actually grabbed onto that pretty damn hard. I think because it exposes a little more, right? There's more information there, and like, by writing a review, it's a little more controversial, it's shareable, it's all this stuff. But
Yeah,
yeah,
no.
well, how would you like the reception? Talk about it.
No, I mean that was perfect. I think Ethos Markets is one of those things that we don't get to talk about a lot because like Ethos Network consumes most of the content now, and I actually think it has a lot to do with, again, more human nature. Like, people care about what they say, what is said about them. They understand the value of social reputation, and the ability to like flex that or have someone observe that is really powerful. And then I think also a little bit of the vindication side of like, oh yeah, I did not like that guy, or I hated that guy. Now I have like a chance to go be a small account and call someone out and have, a voice in the equation, even though I don't have the 100,000 views on my tweets. I also thought Ethos Markets was going to be the lizard brain thing that drove Ethos, and the number of conversations I had with like very smart people that are like well positioned in the space that were like, Ethos Markets is it. That's, you solved the problem. This is how you solve reputation. And they're like, this is amazing. This is 100% how you solve it.
I am people.
Yeah, there you go. Yeah, Bread Guy's one of the people. And like everyone was like, yeah, this is amazing. This is it. And then like it just didn't get as much traction. Like people aren't as interested. And I think it's not as obvious how to make money, and it's on a bonding curve. So you can't really play order book stuff. Like it's a little bit harder to squeeze out a profit there. But I think Ethos Markets is kind of early. I think it's just hard to wrap your brain around what it is right now. We'll get to a point where I think people get it.
I think upon reflection, right? I think the reason why it is the reverse is because everyone was optimizing for like, you thought you need the money making aspect in order to begin the flywheel. And in thinking of that, I was thinking like the flywheel was a monetary flywheel, and there frankly are just better options. There were better options, like meme coins, right? Like, I'm gonna go play that casino. I'm not gonna play some weird trust score casino that I have to relearn or whatever. So upon reflection, I think the flywheel is the reputational score flywheel, right? It's like people want to show how reputable they are, and like that's the dopamine thing, and there is no alternative to that in the ecosystem. So that's why they gravitated to that side of the house, because there was no replacement. There was no meme coins of reputation that I could go and just like instantly get 1,000x on my reputation outside of like the timeline and like likes and like whatever. So like you can get kind of that, but yeah, upon reflection, I think that's ultimately what it was.
Yeah. Go ahead.
Do you intend for those two layers, the Ethos network and the markets, to be stronger connected in the future, so that maybe if there's like a disconnect between your reputational score, which could be very high, but people are distrusting you on the market side, that this has an impact on your scoring in the future?
Yeah, I mean, this is a great question. That is how I think about it. It doesn't impact your score right now. The way that it works is like Ethos is a protocol. Ethos Network sits on top of that protocol and it's kind of like a block explorer. And then Ethos Market is like to the side, and it kind of like observes other data and shows Ethos data there, but it's not necessarily driving any information back to Ethos. And the way that I think about it,
you don't highlight a mispricing.
No, we do. Yeah, that's the one thing that we do.
Okay.
Yeah. So like if you pull up Bread's profile right now in Ethos, what you would see is Bread's score, which is probably like super high, reputable. If you actually go to his market first, and then in the top right quadrant, there's like Ethos profile. It says 828 reputable or 1928. If you click that profile now, what it will show is it'll show Bread's Ethos network profile, and it's like, okay, cool. Yeah, he's reputable, 1928. And then underneath that, you can see, hey, there's this difference between his market and his score. And so what we've been trying to do is say, hey, the score is actually more of like a ground truth. It's the like ideological proof that like he is reputable given consensus of, hundreds of other people, vouched money, stuff like that. And the market is more of the speculation. And so in theory, it's kind of trying to highlight that difference. And right now there's no benefit to playing that difference. Like if there is a difference, you don't get anything by being, other than like potentially arbitraging reputation, you don't really get anything. What's interesting is if you get to a point where you have a ground truth in Ethos Network, then you could offer something like perps on Ethos Market, and you could use that ground truth as your funding rate. And you could say like, hey, like Bread Guy is like, he's super reputable, but he's not reputable enough on the market. And so you could say, hey, we're going to basically incentivize people to long Bread and like make it super expensive to short bread. And that would get us that would basically be the perps model that most people use. That would get us to a little bit closer point of like, okay, maybe these two things can stay in sync.
All right, I'm gonna flip the script a little bit, and I want to throw some challenging questions at you. I know you have like a FUD space that you do occasionally. I was actually, I know you came to me originally as like most of the friend tech people like, hey, original investments, like you want an angel and this stuff. I wasn't positioned to be able to do that, but I was also like generally just a little skeptical. I was like, okay, I don't know how much money people are willing to put into just like doing reputation, right? And like even now, I'm still a little skeptical of like the vouching aspect of this, right? Because as a purely analytical person, I go, I have ETH. Why would I put that ETH in a like to show that someone is reputable when I can go and deposit it into a vault and get another 10% or 15% or whatever? You know, I would have possession of it at least, right? I think even having possession of it is a little more than putting it in someone else in a protocol. What do you see as the potential risks for Ethos as something to continue to grow? And how do you anticipate like making it like profitable as a product, man?
Yeah, I mean, good question. I would say the biggest thing that we've been focused on right now is solving a core customer problem. And the problem is there's a lot of fraud, there's a lot of scams, and it's really difficult to know who to trust in the space and who not to trust. And I look at that as a foundation to the rest of the future business. If we look at ethos.network and the protocol itself, what it is creating is the equivalent of a FICO credit score, but a social credibility score. And what you can do once you have something like that really opens up the door to possibility in Web3. We are not able to do things like have clean and easy over-the-counter deals with each other unless we know each other. We are not able to offer each other competitive lending rates unless you know anything about the other person. We are not able to even identify well who should get access to these tokens or this airdrop or this allocation for an angel check. It's really difficult to understand those things. And the way that I see our business evolving is we view Ethos, the protocol, as a future public good. Like it's a public good that other people can observe and understand and interpret. And we want to build things on top of that public good as Ethos, the company. And what we intend to do with that are things like, again, the biggest problem spaces of trust. Hey, this is a new project that's launching. Like, who is behind it? Why are these people behind it? What do they put any skin in the game when they decide that they're going to back this new thing that's launching? Hey, I want to do an over-the-counter deal with someone. I want to pre-sell by X, Y, or Z. Or, hey, I want to go offer someone this competitive lending rate. There are a lot of places in Web3 that get better with trust. And we could say as a company, we're going to go integrate with those things and we'll have other people go build it and they'll just use the Ethos score. But my opinion is we can make just kind of like think about going from Craigslist to eBay. Craigslist itself, and this is just like kind of one vertical, Craigslist was the Wild West, right? And eBay in the early 90s, before it had feedback or anything, was the Wild West too. You were just buying anon from random people. When you go to a trusted marketplace, that's when you can actually create a business around it. When you can go to trusted just interactions, everything that we do is financialized. Everything needs to be trusted. Then you can offer, better credit rates. Like there's so many things that we can unlock. The difficult thing is we really need to be solid and believe in the public good that we are producing, right? The score needs to be solid.
Yeah, that public good aspect is definitely the way that I started to think about you guys. I think for the people that might be skeptical, I think there's probably two things that seems to be happening at the moment. And I know you're super transparent about this and are kind of figuring out how to address these things, but wanted to give you a chance to speak to it. I think firstly, there's definitely some like gaming of the scoring. And to be clear, these are things that happen in crypto a lot anyway, with like airdrop farming and just creating data, spinning up data out of nowhere. And actually happens in the world, right? People are always trying to figure out ways to game any system. So I think there's a little bit of that going on. And you did this post a couple of days ago, I think, talking about the leaderboard specifically. So I think obviously you've got the individual profiles that generate an individual score, but then when you put it on the leaderboard, people were kind of looking at the leaderboard, just kind of saying, well, I'm sure these people are nice people, and some of them really are, but is that necessarily reflective of maybe the general Web3 community that you're trying to capture, or has it been either gamed in some way, or maybe some people haven't been participating in the exact way to create like a holistic snapshot that is helpful to people? So how are you thinking about those issues, and how are you thinking about tackling them so that that kind of snapshot data, when you look at the leaderboard, can be better and those numbers can be more solid, as you just described?
Yeah, it's a good question. I mean, two things to unpack there. The leaderboard itself as a ranking algorithm is kind of misleading, because if I think about what my intent is with Ethos, it is not to say like this person is absolutely more credible than that person. It is more relative speaking, these groups of people that have these traits and characteristics and this type of consensus tend to be more reputable than those people. And when you look at it like a ranking algorithm, which is what a leaderboard is, it kind of misconstrues the concept that it's like a zero-sum game, that only one person can be number one and only one person can be number two. And so it is also helpful though, because a leaderboard does kind of create competition and people will care about their scores more. So as a builder, like I want people to care about their scores. I want them to be competitive about it. So one of the things that you'll see us ship soon is like a different leaderboard, more of a set of leaderboards. A general leaderboard of everyone and hey, these people are the most reputable doesn't actually help you that much. You need more localization. And so you think about categories of things like, hey, who is the most reputable VC in the space? Or who is the most reputable NFT upcoming project? Those are the kinds of things that I think about right now in terms of like making that leaderboard. So it doesn't feel as much as a ranking algorithm of like a bunch of stuff pulled into the same bucket when they shouldn't be. The second thing is like, well, now I forgot it. We were talking about the leaderboard, but I forgot there was another point that you made about, gamification. Yeah.
Yeah,
So
just like people generally trying to game the system, get a higher score.
I mean, come on, we're in crypto, right? Like I think about Bitcoin mining, right? Bitcoin mining was all about gaming the system. It was like, how did you optimize your hash rate? Like this is what proof of work is good at, is getting people to optimize their hash rate and figure out how to solve the algorithm, crack the code. And what I would say about gamification, first off, is like, you're never going to solve 100% of fraud. You're only going to solve 99% of it, or 99.9% of it. And I don't even consider it fraud. It's just people who have figured out how to gamify it better than others. And I think that the game right now is shallow, to be honest. Like, whenever there are ways that the guys at the top of the leaderboard, to be fair, they have a lot of popularity. They're leaders of groups and they have a bunch of people that follow them. It's kind of popularity. Popularity and reputation do go hand in hand a lot. You don't really hear of people that aren't popular that have a significant amount of reputation. And so I think in the data, you look at those guys and you're like, that actually reflects, in theory, what should be true. 155 reviews, 55 vouches for $20,000. Like that sounds reputable, right? But they have gamed it for the most part, not explicitly, but like they are intentionally trying to increase their score, right? Versus someone like Bread Guy, who I doubt has ever like went out and asked someone like, go write me a review or go vouch for me. And Bread Guy might be just as or more reputable than those people. And so I think that's where it's difficult. But again, I say it's kind of shallow because we haven't really gone super deep on the algorithm yet. I mean, it is very complex already, but there are things that we can do. Like, well, what is like the quote that the post that I retweeted actually went into this idea of like, what if you could add a like anti-gamification score to it? Yeah, if you click into that. And what it does is it like adjusts everyone's score for like if it looks like they tried to gamify the system or not. And so like Bread Guy wouldn't have reviewed someone back within 24 hours or sent out a ton of reviews and not had a lot of reviews for himself. Like there are things you could look at. The other thing I think about a lot is distance on a network graph. Like if Bread Guy and I are probably actually pretty close on the like overall Ethos social graph, but like me and someone I've never met before are probably pretty far. if I've never met them before, like that, and I write some content and that content is upvoted by a bunch of other people, then that actually is a really solid indicator of trust versus, hey, bread guy and I like wrote each other reviews within 5 minutes and like both upvoted the same thing. And like the appearance of gamification was strong. So you know, we're never going to solve fraud. Like, again, I say fraud, gamification, whatever, like you're never going to solve that 100%. So like our goal is to prevent that from happening and ensure that like you get the best score, you have integrity in the system, and you'll see us continue to ship updates to ensure that that's true.
I think this is
Sort
one
of
of
going
the
down a rabbit hole on this. Oh, sorry, yeah, finish up legendary, but I have a point I want to extend.
Yeah, I think this is like one of the most fascinating things, because in theory, as you said, you don't need the points. It's not about the question, is Sanjay more reputable than Pix? It's the question, are they generally reputable? And is there the resilient score? We've seen it, for example, and that was like one of my favorite things to see happen is the slashing of Elena. And basically leading up to that, there was like some negative review bombing, and it did not impact her score too much. Like she lost 2% of the negative review bombing, which was great to see, because that like gang mentality, that like, you know, mobbing up and trying to attack one person did not work out, which is good because that should not be the case. So in theory, it would be just enough to see, oh, okay, bread guy is green, this person is blue, this person is questionable, this person is like deep, deep red. But then again, the fun is to actually have a score that kind of shows, you know, legendary is less reputable than Zeneca, or whatever the outcome is, which doesn't, it's not necessary for that to exist for the platform to work, but it's exactly what then users and degens kind of find fun and make them want to come back and use the platform. And by doing that, actually they make it more reputable because there's like just more data flowing into that. And I feel like this is like one of the biggest challenges you have, balancing between like the fun, which kind of also incentivizes the gamification of that, and then the like measurable quality of what Ethos network is actually intended to do, and which I think it already does pretty well.
Yeah,
Sorry,
I mean,
Brett, for cutting you off.
Well, let me answer some of those things real quick, because I do think that the gamification is important, right? Otherwise, no one would use it. And the biggest thing right now is like we're coming up on 50,000 reviews, which is insane. Like literally going to blow my mind. Like I can't even believe there's that many reviews out there, and I think there's close to 10,000 vouchers. And from my fundamentals perspective, I don't give a shit if you wrote 2 letters in a review. You still wrote the review. Now we can go take that data and analyze it more, right? Like we are very shallow in how we judge that information and look at that information. Now we can go back and say like, all right, cool. OpenAI, here's like 100 reviews for this person. What are the 5 categories that you would describe this person as? They can come from these 25 different categories. Like, is it a trader? Is it a degen? Is it a founder? And I think the other thing that we think about is like, the quality of it. We could judge quality, look at all of the data using AI and say like, what sticks out as quality? What doesn't stick out as quality? What sticks out as unique versus slop? And I think that's where the true power comes in. And that's why I'm like, I would rather have all of the data and have everyone say who they trust and who they don't trust, even if it was crap, because it still helps us create this like untapped market of information that we've never had before.
This place loves relative value. Like so we're always gonna do the relative value thing, peg it to something else. Something that actually you got my mind going on a little bit ago, and I started looking into noticing the adoption, and actually 2 things. So one, you talked about the 50,000 reviews. I remember early on you were generating like or you had prepared like bots to like actually go and do reviews for you, probably because you had a concern that people weren't going to fill out that actual like the graph itself, right? But like I don't know if they're still going or if
I'm not sending them anymore. No, yeah, it was like the early flywheel. Yeah.
You need it in place, and they were actually pretty good. And they're based on like actual information. It wasn't just like reviews for reviews' sake. It was based on like Twitter data, whatever. But then the other thing is, you know, you're talking about like social graphs now, and value, like how you value these people. It starts to make me think of how Kaido has taken some of this and turned it into an actual profitable business, mostly from a product, like an external product or utilization standpoint, right? Like Mega ETH as a ecosystem, right? We have a Kaido dashboard because it's useful to identify a social graph. It's useful to identify people who are actually valued by the ecosystem, right? And then that gets me back to thinking about the Polkadot fiasco of them paying a bunch of KOLs to go and do stuff. And then I go and I look through like the review scores of a lot of the old heads who you would presume are like very big, very dominant players in the ecosystem, the Gainsies of the world, El Capo, right? These people that actually were paid a shit ton of money. Gainsey wasn't, but El Capo was, like shit ton of money to like promote projects. The review's nothing. And like, that's not to say that like, I think their Ethos scores are both gray, just like 1200, middling, whatever, for a massive, massive account. And it shows me, that tells me that either not that they're not trusting, but just that in the current cohort of active participants in the ecosystem, they are not in the thought, right? They're not present in the mind share of people to like go and actually even give a shit enough to give a review on them, right? Like I don't think about Gainsey, which is like kind of indicative of like the power that they might have in a situation where I, as a product, want to come and actually pay them money to promote something for me. It's like El Capo, whatever. So then you have this world where like, I was like on the fly thinking of it, is like, how do you have teams that can leverage this stuff to then like cross-reference or maybe sponsor something to drive like revenue for Ethos as a product to facilitate information gathering for them, because that is valuable. Just it's about quantifying it and packaging it up into a service.
Totally. Yeah. I mean, this is where like, oh yeah, I spent a decade in B2B SaaS. I should probably be thinking about how we can take this data and sell it to someone. That makes sense. Like businesses would die for this data. This is the ultimate sales qualification tool. It's the ultimate marketing qualification tool. And it's very similar to Kaido in that sense of like, people with Kaido want to know, like Mega ETH might care, who has the most attention when it comes to tweeting Mega ETH content. Where are they getting that attention from? I mean, I'm sure, I don't know if you guys use the like real Kaido dashboard, Bread, but like as a business, it's so powerful. It's like, I got mentioned in this random Twitter space that I have no idea who these people are. Like, I'll go give that guy a follow or whatever. Like, Kaido itself as a tool for product teams or marketing teams or sales teams, crazy powerful. And I like to think of it as we are instrumenting and measuring a different data set than Kaido is. Still relevant, still important, extremely complementary to what Kaido is doing. They are measuring more about, in my opinion, attention and where that attention comes from, and being able to highlight that to different teams, which becomes really valuable with launching products, again, or with the like, hey, I'm a marketing team and how do I like qualify this lead? I think we can do something really similar to that. I think our data set is a little bit different because it shows the reputation side, where maybe it's not that this person has a bunch of influence publicly because they have the ability to drive that attention, but rather they have a bunch of influence because of their reputation, and they never tweet. They never talk about things publicly. They're just well connected and know people. Or this influencer, has a yellow circle around their name because they actually do have a bunch of influence. Like think of like Andrew Tate as an example. He has an incredible reach and ability to drive attention, although most people would argue that his reputation is really poor. And so I think of it as kind of like a, additional data point that I think will be really helpful to businesses. And yeah, you could build an entire business just selling that data to someone. Like, even if it's the same data that's on chain, you're like, well, we packaged it up and it's an API and it's really easy for you to use now. So, or data visualization, like what Kaido does is like, they have crazy dashboards that you can build that analyze things across all kinds of different spaces. And so that's the other opportunity for us too. But again, it's kind of, it's a stark contrast from the like, I'm building a public good, that like, it's like, then I'm also building a B2B SaaS product. Like, they're very different.
I think it's just a back end thing. Like, as I think about that further, like, yeah, like Kaido has the multifaceted one where it's like the front end is like, yeah, cool, you can go look at stuff. For you, that's the review and like seeing the high level scores, whatever. But all of the data visualization and maybe like some of the nuanced stuff, maybe references on the back end. Like, yeah, if you could package that up as just like a monthly sub or something for people to be able to see, I think that maybe there's an opportunity there.
Totally.
I think you mentioned like a couple of interesting things, and I have a couple of questions picking back on that. But going to Kaido, like I'm a subscriber to Kaido, and this is how I like to use it, is exactly to look at people who I think are interesting and see whom they are following, to discover maybe there's a round going on where I want to invest in about a project I wasn't aware of. And I do the same thing, honestly, on Ethos as well. I go specifically to your profile because we don't have the biggest overlap on like people who we are following. And I'm looking, who are you giving a good review? Because those might be interesting people for me to discover. But then you also made this interesting point, like you're building the public good, but you also see there is an opportunity for there to be a B2B SaaS business. So maybe going exactly into that money layer on the platform, is it important for Ethos at some point to be a profitable business? Do you even want it to be a profitable business as a public good platform or layer that you're building?
Yeah, I mean, this is a really good question. The way that I look at it is a public good is more of a like foundation type business. It's like you have something that you publish, a labs group works on whatever the foundation decides, and I don't imagine it this way, but like there's a DAO that kind of determines, or a committee that determines the direction that the entire protocol works. And I think I see Ethos. There's a part of Ethos that just does that, to be clear. Like just focuses on pushing the protocol forward, just focuses on ensuring that it is a public good that other people can use, other people can extend to, and can be steered in the right direction. The way that I view the business on top of that, again, it goes back to like, well, it could be B2B SaaS. It could be that we build over-the-counter trading, which is something that we're thinking about working on right now. Or it could be that, like Ethos Markets is a speculative product. You can go trade on it and it makes a bunch of money. I don't know that, like, my most important goal right now is to ensure that the foundation is solid. If we can't set the foundation correctly, like not like the actual foundation, the theoretical foundation, like that lies underneath it in the protocol, that needs to be solid. And that's what we're focused on right now. The businesses that exist on top of it don't have to be incredibly successful for the protocol to be very successful. I think one of the biggest weird things that I've learned about Web3 that is totally different from Web2 is it's the app store play. In Web 2, there's the app store play, which is like I build an ecosystem and then I enable businesses to exist on top of me. And it happens in infrastructure land. Mega ETH has businesses that are building on top of them right now, right? It's really, really hard to pull that off. It is like a totally different world. It is challenging to convince people to take a bet and swing on your infrastructure. And it is really difficult to get people to commit to being on your infrastructure. And the switching cost is usually not that high to get off of someone's infrastructure. Like it's a different world. And so what I think about that is different about our strategy than if we were in Web 2 is like, I want to be the one that builds a lot of the stuff, because it is really difficult to convince people like, hey, this is worth building on top of. People are just going to go decide to build their own thing, right? We could have built this on top of Friendtech data, but we said, no, we're going to go build our own thing. And that's what everyone with an L2 or an L1 is doing now. Like, I'm not going to build on top of that. I'm going to go build my own thing, right? And so like, it's difficult to depend on that. And this is a really like kind of backwards way of answering your question. But like, I do think that those businesses should be profitable for Ethos to be successful and must exist for Ethos to be successful. But like, none of those things happen if the foundation isn't set correctly. And that is really what our like near-term focus is right now.
Gotcha. Look, we've been running this interview for quite a while and we could go for so much longer, but we are about to wrap up. I do have 2 more questions on that. So basically, because I love this analogy, there is the app store and you're also like happy to build, once the foundation on a technical layer is solid enough, to build some of those apps yourself. Is this then how you envision for the long-term funding for Ethos on a foundational level to be secured by just having some of the premier apps that are being built within your ecosystem?
Yeah, I would say like 100%. Like if you could build a trusted marketplace that like 2 people can trust each other, and whenever someone defects on a trade or exits a pre-sale of something, it actually impacts their credibility score, then you could charge for that and it would be pretty easy to build a business on top of that. No one has really been able to do this outside of the like pure permissionless like NFT model of like, or Uniswap model of like, I'm buying this thing from another person and it's just through a smart contract. So I think that those businesses will be self-sustaining. It's not even businesses, right? It's just other products that are pretty lightweight. Like it's Web3, it doesn't take a lot to build things. You could copy a lot and leverage a lot of other things in the space. Build those things on top of that foundation, and they do feed back into like what the foundation does. I think you're kind of pushing at like, also like, yeah, like how does Ethos work as a foundation itself? Like, we're taking a fee on staked ETH at the protocol level. There are other ways that we could monetize the protocol level that operate more like gas, if that makes sense. And so like right now, if you go look in the smart contract hard enough, and I doubt anyone has, like we could charge $1 every time you write a review. I don't think that's the right answer, but if we get spammed a lot, it could be. It's like postage, right? Like the way you solve the spam email problem, or the way you solve the spam mail, physical mail problem, is you charge 65 cents or whatever to send a piece of mail. So I think there are a lot of things that could happen at the protocol level that the foundation could actually use and build on top of itself too, and kind of leverage as revenue. And so there's a 1% fee on staking right now. It doesn't, I mean, there's like $1 million in TVL. That means we've made 10 grand on that. That's not a business, but like, there's only 2,200 people on the platform. You start to scale that. Maybe vouching has more dynamic aspects to it. Like there are ways that we could enable it more at the protocol level to generate revenue too.
Yeah, there's so much potential to go into depth with that, even if you were to combine like, free reviews depending on the score, et cetera, et cetera. But like one final thing that I want to mention before I'm going to hand back to you, Vivek, to maybe have a final question and then close us out is basically you said that, other L1s, other L2s could say, no, I want to build my own reputational layer. So at some point you're becoming very similar in terms of how I think about social media platforms, because you have all the ex-competitors, but I'm reluctant to move over because there's nobody there. So if you build this critical mass of reviews and you have 50,000 of a couple thousand users, which is an insane amount, you will probably get to some point, if this continues, where nobody wants to use another reputational layer because there's nobody there reviewing people, and you have built this stock of users. Is this how you're thinking about the growth? Like very similar to social media platform?
Why do you think it's free? Why do you think it's easy to do right now? Like this is the Web2 growth play. This is what my bread and butter is like you go give it away for free. Like you have to build the network effect yourself, right? You have to build the moat yourself. Like why would we charge for any of this stuff right now when that helps us, and it's good for everyone, helps us get to a point where we have network effect and impact. And like, I always think about, I mean, I don't know, maybe aging myself a little bit, but like, I watched Google Plus come and try to compete with Facebook. It was a joke, right? Like I remember everyone being extremely hyped about Google Plus, and you're like, this is a joke. What actually changed Facebook versus Instagram was Instagram was like a different medium, a different piece of content type. It became a different way of sharing information, and Facebook could not be competitive with it. Instagram built up such a network effect that it became became super competitive to Facebook, even though they were solving different problems. It was taking the same attention that you had in terms of social media, and people would come in and they try to replicate Facebook, and it wouldn't work. It wasn't ever going to work. The network effect became Facebook's moat really early on. And so if we can have a similar thing, we're like, wow, we have a ton of reviews. People already have their reputation there. Are people going to go ask the same people to review them on another site? Are you going to go write another review for Bread Guy on, the other sites? Like maybe, like if you think there's some sort of incentive there for doing so. But I think the data and the people become the moat, and it's not an easy moat to build. It's actually really tough in Web3 to build moats at all. Because you could just rip off the smart contract. Like, I'm just going to fork this shit and take it somewhere else. Like users and data become the moat. And so and people could do that with ours too. They could actually fork our review contract, bring all the data with them and say, here's a better UI. And like, yeah, like it's debatable on if that's good or bad for us, but like, I think that's how I think about our moat is network effect and the data that we're building right now. And that's why we give it away.
You're building up the switching costs, right?
Mm-hmm. Right, exactly.
Yeah, and like really interesting.
Because most people's moat is like price or like speculation, like those things don't keep your attention for very long. Like I think one of the things I'm most proud of right now is like our week 8 retention rate is like 65% right now, which is like, that is a really good product. Like you usually have like 10% retention after week 8. And so people are still staying in the loop and they're still writing reviews after week 8. And like, they're still upvoting content. And like, if you can keep people engaged like that over a period of time, then we're doing something right.
It's a really interesting point, because I think one of the things that people may have thought initially was because you came so quickly after Kaito and people's brains were like, okay, well, this is a social thing. You've got all of our profiles, they've got a bunch of data, and like in a similar way, you've got a bunch of profiles, you've got all of our data. People were like maybe putting you up as competitors in some way. But I guess what you're showing with that Web2 analogy is like, look, one of them is one thing. We're like doing a different thing, and it doesn't make sense for us to be compared in that way necessarily, because we're building up a different way to communicate that information. In the same way that Facebook communicated in one way, Instagram was just a different thing, and therefore built up its own network effect. So I think that's a really interesting way for people to frame, for people to understand just where you guys are thinking about framing it.
Yeah, Kaido is complementary to Ethos, and 100% of it. Like, yeah, it is additional data that we've never had before, and that's why I think they work really well together.
Interesting, fascinating stuff. But as you said, we have to round off pretty soon. We've obviously gone through a bunch of stuff to do with product, philosophy, monetary stuff as well, how you're planning to monetize the future plans. But is there anything else you'd like to share before we round off, Sep?
Yeah, I mean, the biggest thing for us is like, we learn by shipping. Like, our product we built, we put it out there. I want people to attack it. I want people to come to the FUD spaces on Thursdays and say like, this pisses me off. This doesn't make sense. I don't understand why you're doing this. And I think the other flip side of that is like, people tend to think about things as very hype oriented with stuff like, oh, I'm super hyped for this thing. And then I stopped using it, and you build up all this hype, but they're just like, no one cares anymore. And we are not that at all. And that means like, we need your feedback and be patient with it too. Like, we are going to build this alongside everyone. The data isn't going to be great or amazing to start. This is something that we all have to build together. And it is a very different thing to like turn that upside down in crypto and be like, no, you got to think for the long term here. Like, this isn't about the next three days. This is about the next 10 years, right? And so when you're thinking about Ethos, I would just encourage everyone to think about it that way. Like, bring your feedback to us. And remember, this is a long-term thing that only gets better with time. We just have to continue to improve it every day.
Excellent stuff. So as you said, let's if you want to follow along, it's at ethos_network. So thanks so much for joining us. It's been a really, really interesting conversation. I hope that's provided like a whole load of context and answered a bunch of questions that people are interested in. And as you said, if you want to get involved, those FUD spaces on Thursdays, join and contribute and participate. I think that'd be super helpful. Thanks so much for joining us, Sep. Just a reminder for people in the audience, we do this every single day, Monday to Friday at 7 a.m. Eastern time. We're live on X Video, YouTube, Spotify, and Apple Podcasts. We'll be back on Monday, same time, same place. Have a wonderful weekend. Take care and goodbye.